Alright, so let me just drop this bomb on you right away. You are, and I mean this quite literally, probably leaving thousands, if not tens of thousands of dollars on the table. And it's not because you're bad at picking stocks or because the market is rigged. No, it's because of one tiny, often overlooked feature on your trading platform that you're likely not using to its full potential, or maybe not even using at all. In this video, I'm going to break down exactly how to master alerts on your trading platform. Stick around because the strategies I'm about to share could genuinely change the way you approach the market, and you definitely don't want to be the one still missing out. Alright, let's dive straight into the absolute bread and butter of trading alerts: price alerts. Seriously, if you're not using these, you're basically trading with one hand tied behind your back. A price alert is exactly what it sounds like. You tell your trading platform, hey, let me know when Tesla hits $180, or ping me if Apple drops below 165. It's your personal market sentinel, watching prices for you so you don't have to. Without a price alert, what's your strategy? Stare at the chart all day? Set a million calendar reminders? That's just not efficient. Price alerts automate this vigilance for you. Most platforms offer a few types of price alerts. You can set alerts for when a price moves a certain level, or even a specific price. Setting them up is usually super straightforward. It takes, 30 seconds? And those 30 seconds can save you hours of screen time and potentially make you or save you a significant amount of money. So if you take away one thing from this section, it's this: go set up some price alerts. Okay, so you've got your price alerts set up. Fantastic. But what if I told you there's another layer, another crucial piece of information that can give you an even bigger edge? I'm talking about volume alerts. Price tells you is happening, but volume often tells you is behind that move. High volume can signal strong interest and a more sustainable trend. A volume alert tells you when the marketplace for a particular stock suddenly gets way busier or way quieter than usual. For example, imagine a stock has been trading an average of 100,000 shares a day. You can set a volume alert to notify you if, say, the volume in a single hour exceeds 50,000 shares, or if the daily volume surpasses 500,000 shares. This is especially powerful when combined with price alerts. Let's say you have a price alert for a stock to break above a key resistance level. If that price alert triggers, you simultaneously get a volume alert showing a massive spike in trading activity. That breakout is much more likely to be genuine and have follow-through. Volume provides context to price movements, and volume alerts ensure you don't miss these critical contextual clues. So start experimenting with volume alerts. Look at the average volume for stocks you follow and consider what would constitute an unusual level of activity. Alright, we've covered price and volume alerts. These are fantastic for tracking market mechanics, giving you a clear picture of how a stock is performing. But what often drives those mechanics? News. Yes, news can be a powerful catalyst. A single headline can send a stock soaring or crashing in minutes, altering the market landscape rapidly. If you're not staying on top of relevant news, you're essentially flying blind to some of the biggest catalysts in the market. Missing out on crucial information can be detrimental. That's where news alerts come in, and they are absolutely critical. They keep you informed in real time. Imagine you own shares in Pharmaco, a biotech company. You've been following their progress closely. They've been working on a new drug for years, investing significant resources and time. Suddenly, news breaks. Pharmaco drug fails FDA approval. This is a major setback. What do you think happens to the stock price? It plummets, right? Investors react swiftly to such news. If you had a news alert set up for Pharmaco, or even for keywords like FDA approval related to your holdings, you'd get that information almost instantly. This allows you to make timely decisions. News alerts can be set up in various ways, tailored to your specific needs. Many trading platforms have built-in news feeds, providing a steady stream of updates, and you can often set alerts for specific tickers or keywords, ensuring you don't miss out on critical information. The goal is to get timely information that could impact your investments, delivered directly to you. This can make a significant difference in your trading strategy. The speed of information is everything in today's market. Being the first to know can give you a competitive edge. Retail investors are often the last to hear things, putting them at a disadvantage. News alerts help level the playing field a little, giving you a fighting chance to react promptly. Consider a real-world example. A few years ago, when a certain CEO tweeted something controversial, it caused a media frenzy. Their company's stock took an immediate hit. the market reacted almost instantaneously. Those who had news alerts set up for that company or CEO likely saw the news or the tweet itself, giving them a head start. If they were monitoring social media alerts, they could act quickly, and could react far quicker than those who found out hours later on the evening news. Timing is crucial. So, take some time to configure news alerts for your key holdings. It's a small step that can have a big impact in any specific sectors or economic events you're tracking. Stay informed, stay ahead. Alright, we've covered price, volume, and news alerts. These are all incredibly powerful tools that can give you an edge in the market. But for those of you who like to get a bit more technical, who believe in the patterns and signals generated by the market itself, there's another type of alert that's indispensable: technical indicator alerts. Think of these as your personal market weather forecast, warning you of potential storms or signaling clear skies ahead. Technical indicators like moving averages, MAs, relative strength index, RSI, MACD, Bollinger Bands. These are tools that traders use to analyze price trends, momentum, volatility, and more. Manually watching multiple indicators across multiple stocks can be incredibly time-consuming and prone to error. Technical indicator alerts automate this process for you. You define the condition, and the platform tells you when it occurs. For example, a very common strategy involves moving average crossovers. You might believe that when the 50-day moving average crosses above the 200-day moving average, a golden cross, it's a bullish signal. Instead of checking charts daily for this pattern, you can set an alert. Notify me if AAPL's 50-day MA crosses above its 200-day MA. The beauty of technical indicator alerts is that they help you trade more systematically and remove emotion. You're not just reacting to a price jump, you're reacting to a predefined technical setup that you believe has an edge. Many platforms offer alerts for a wide range of indicators. You can set alerts for MACD crossovers, Bollinger Band breakouts, stocks hitting new 52-week highs or lows based on technical criteria, and much more. So, if you use technical analysis in your trading, explore the technical indicator alert options on your platform. These alerts can be the difference between catching a profitable trade and missing out. Last but certainly not least, let's talk about earnings report alerts. These are absolutely massive. For many stocks, the quarterly earnings report is one of the most significant catalysts for price movement. Investors and traders alike eagerly await these reports, as they can provide crucial insights into a company's financial health and future prospects. A company can beat expectations and soar, or miss estimates and plummet, often by double-digit percentages in a single day. This volatility can create both opportunities and risks for traders. If you're trading individual stocks, you need to be aware of earnings season and have alerts set accordingly. This preparation can make a significant difference in your trading strategy. Setting an alert for an upcoming earnings report date is step one. This ensures you won't miss the critical moment when the report is released. You need to know when Company X is reporting. Missing this information could mean missing out on a significant trading opportunity. Many financial calendars provide this, and some platforms let you set reminders. These tools can be invaluable for staying on top of important dates, but it's not just about the date. The content of the report and the market's reaction to it are equally important. You also want to set alerts for what happens after the report is released. This helps you react quickly to any significant price movements. This is where your price and volume alerts come back into play, but with a specific focus on the earnings event. These alerts can help you catch rapid changes in the stock's behavior. For example, you might set a price alert 10% above and 10% below the current price of a stock that's about to report to catch any major gap up or gap down. This strategy can help you capitalize on sudden market movements. The key is being informed of these significant news-driven moves as they happen. Staying updated can give you a competitive edge. Earnings season is often a period of heightened volatility. This can be both a challenge and an opportunity for traders. Stocks can make moves in a day that they might otherwise take months to achieve. This rapid movement can be leveraged for significant gains if you're prepared. Some platforms might even offer specific earnings alerts that notify you when the actual EPS and revenue figures are released, comparing them to estimates. This immediate access to data can be crucial for making informed decisions. This is incredibly valuable for getting the raw data quickly. The faster you have the information, the quicker you can act on it. So, make sure earnings dates are marked on your calendar and set strategic price and volume alerts around those dates for the stocks you care about. This proactive approach can help you navigate the complexities of earnings season with greater confidence. Alright, so there you have it, your ultimate guide to mastering alerts on your trading platform. We've covered the absolute essentials price alerts, making sure you never miss your target entry or exit points. We talked about volume alerts, helping you gauge the conviction behind market moves. We dove into news alerts, keeping you informed of those game-changing headlines. We explored technical indicator alerts, automating your chart analysis. And finally, we hit on earnings report alerts, so you're ready for those big company-specific catalysts. Each of these alert types is a powerful tool on its own, but when you start combining them, that's when you truly unlock a new level of trading intelligence. This is about being proactive, strategic, and using the technology at your fingertips to make smarter, more informed decisions, and ultimately, to hopefully make a lot more money and save a lot more time. So, what are you waiting for? Go into your platform and start setting up some of these alerts. Experiment, see what works for your style. Remember, the power to transform your trading is literally at your fingertips. An investment in knowledge pays the best interest. Go out there and make those alerts work for you.